Tesla is finally catching up with its new Tesla Supercharger network. Elon Musk's promises to boost Supercharger network beyond the 250 kilowatt limit as it aims for faster charging to compete with rivals offering 400 kilowatt. So how is Elon planning to close this gap and keep Tesla at the forefront of fast charging? The Supercharger V4 is capable of 350 kilowatt charging. However, Tesla has been deploying these new charging stalls with the old V3 cabinets, which provide power. These stations are called Supercharger V3 Plus. It's like having a shiny new sports car, but not being able to drive it at top speed because the roads can't handle it. But that might be about to change. Tesla lead engineer Wes Morrell recently revealed that the automaker is testing the capacity of some of these V3 Plus stations to charge at over 320 kilowatt. The trial site saw a peak charging speed of 323 kilowatt, way above the typical 250 kilowatt. The charger was outputting over 900 amps to reach that 320 plus kilowatt charging power. That's significantly higher than the original 425 amps rating for V3 superchargers. It seems Tesla is pushing the boundaries of what its current hardware can do. This is great news for Tesla drivers, who might soon enjoy faster charging speeds at select supercharger stations. But it's also a bit of a surprise, given Tesla's recent turmoil in the supercharger department. Earlier this year, Elon Musk fired nearly the entire Tesla supercharger team. Despite this, Tesla has promised a $500 million expansion to fund thousands of new chargers. How is the charging landscape changing for EVs? Tesla's pullback on supercharger operations hasn't slowed down others. Ionah, backed by 7 automakers, is pushing to build over 30,000 high-power connectors. Even BP is eager to take over unwanted supercharger sites. Meanwhile, Tesla's Cybertruck is designed for super fast charging with its split battery pack. Even older Teslas from 2021 can handle 300 kW charging, reducing wait times and station congestion. Tesla's not just focusing on faster charging, though. The company is also working on improving the overall charging experience. A new study shows that Tesla still dominates the electric vehicle charging experience, and it's not even close. Tesla's early approach to the charging experience was built as a service to EV owners rather than a way to make money off of them. This enabled Tesla to focus on making the experience seamless, and it worked out. Tesla developed the only global DC fast charging network, the Supercharger network, which enables long-distance travel. The automaker also developed the destination network, which provides charging once you arrive at your destination. Both networks have been recognized as the gold standard of EV charging. The J.D. Power study confirms this, with Tesla's charging networks sitting at the top of the rankings for the best Level 2 and Level 3 charging networks. When it comes to Level 3, Tesla lifts the entire average with the second-best network, ChargePoint, sitting more than 100 points behind. Sources explain that Tesla owners remain satisfied with the Tesla Supercharger network, as evidenced by a score of 743, down just 2 points from 2023. Non-Tesla owners are not quite as satisfied when using a Tesla Supercharger 706, but that score is 42 points higher than the overall satisfaction with DC fast chargers. However, the score is down year over year, which might be cause for concern, but Tesla is not resting on its laurels. The company is constantly innovating and improving its charging infrastructure. For instance, ChargePoint has a new plug system for its charging stations that will make it easier for EV drivers to select the correct connector for their electric vehicle. The new plug, called OmniPort, works by automatically installing an adapter to the tip of the connector when you're ready to charge. This means Tesla owners won't need to bring out their adapters. Sources confirm that charging is about to get easier for both Tesla and non-Tesla drivers. As North American car makers adopt the new NACS standard, based on Tesla's connector, current drivers will still use J1772 Level 2 ports and CCS1 ports for fast charging. This ensures everyone enjoys a top-notch charging experience without juggling multiple connectors. Omni ports are set to ship by year's end and will be included in new station hardware, supporting even 800-volt charging. Plus, owners of ChargePoint's commercial CP6000 and Express Plus PowerLink 2000 stations can easily upgrade with an Omni port retrofit, thanks to a modular design. This upgrade promises a seamless charging experience for all EV drivers. Tesla has also been delivering EV fast charging infrastructure in Australia longer than any other company. With the strong rise in EV uptake over the past few years, the number of new sites coming online has accelerated. Tesla has been busy expanding its supercharger network. They just added 17 new fast chargers across 3 states, bringing the total to 93 sites. In Queensland, they opened an 8-stall V3 Supercharger site in Springwood, south of Brisbane. Each charger there can deliver 250 kilowatt of power. Heading south to New South Wales, Tesla opened a 6-stall V4 Supercharger site in Griffith. This one's open to non-Tesla EVs too, with longer cables to reach other EV charge ports easily. Pricing is 68 cents per kWh POA for Tesla EVs and 92 cents for others. Further south in Victoria, a 3-stall V3 Supercharger site opened in Carrum, about 280 kilometers northwest of Melbourne. It's conveniently located next to an EGA supermarket and other amenities. Tesla has been rolling out updated V4 chargers in North America and Europe, aiming for speeds over 250 kilowatt. Most Tesla vehicles are limited to around 250 kilowatt, except for the Cybertruck and the latest Model Y units. In March, a Cybertruck hit a peak charging speed of over 327 kilowatt using an NH1 station, beating the previous record. This expansion and the trials of faster charging speeds show that Tesla's supercharger network is advancing quickly. It's making long-distance EV travel more convenient and efficient, which is great news for all EV owners. But what's driving the affordability of EVs? The cost of EV batteries is rapidly declining, with a projected 23% decrease by 2024 to around $115 per kilowatt hour, and another 20% drop expected in 2025. Elon Musk highlighted that lithium-ion cell costs have fallen significantly due to increased supply and decreased demand, with lithium prices dropping over 70% in the past year. This trend is making EVs more price competitive with gas-powered cars. Goldman Sachs predicts a tough 2024 for EV demand, but expects growth catalysts in 2025. The break-even point between EVs and ICE cars is anticipated between 2025 and 2026, aligning with Elon Musk's plans for a more affordable Tesla model. Interest rate cuts and government incentives should boost demand. Once EV prices drop below the break-even point, they could become highly profitable for automakers, as EVs lack costly components like catalytic converters and engines found in ICE vehicles. Tesla Model Y and Ford F-Series Lightning have already reached cost parity, indicating a shifting market. Asian lithium prices are expected to stay weak in the first half of Q3 2024 due to oversupply and new import tariffs on Chinese EVs by the US and the EU. Lithium prices in China are projected to range between $11,022 to $12,799, while prices in North Asia are likely to remain soft due to a seasonal summer lull and ample supply. A potential turnaround may occur in the latter half of Q3, a peak season for lithium demand. Chinese lithium prices began Q2 at $13,960 to $15,915, but fell to a 3-year low of yuan 11,168 to $12,564 in June due to weak downstream demand and increased production. China's EV sales in Q2 increased following government subsidies for replacing polluting vehicles. However, US and EU tariffs on Chinese EVs may dampen future sales in these regions. US tariffs on Chinese EVs will rise from 25% to 100% in August, while the EU has imposed provisional countervailing duties of up to 47.6% on Chinese EV imports. Supply pressure intensified as more lithium projects became operational and salt lake production levels rose in China, resulting in a 30% increase in lithium salt output and significant increases in lithium carbonate and hydroxide imports. Spodumene prices need to fall below $800 for favorable margins in Q3. Last assessed spodumene at $920 FOB Australia in July, down 20% since the start of Q2. Now, how does this growth fit into Tesla's bigger picture? They're rapidly building a megapack production facility in Shanghai. This factory is expected to produce around 10,000 megapacks annually, matching their California facility. Elon Musk is betting big on the energy business, predicting it'll outpace the automotive sector soon. Meanwhile, Tesla has been investing heavily in the Lingang special area since 2019, creating an industrial cluster worth over $14 billion. This shows their confidence in China's economy, which is bouncing back from COVID. In other exciting news, Tesla's supercomputing cluster, Cortex, at Giga Texas is gearing up to be a beast. It'll house around 100,000 NVIDIA chips for training neural networks for FSD and Optimus. Musk mentioned it'll need around 130 MW of power and cooling this year, expanding to over 500 MW in the next 18 months. Are you excited about Tesla's faster charging and Elon's new compensation plan? How do you think this will impact the EV industry? Do let us know in the comments below. Also, if there's any specific EV news you want to hear about, drop it in the comments. Don't forget to hit the like button, share this video, and subscribe to the channel. Tap the bell icon to get notified of our latest updates. Your support keeps us going.